Hey guys, what's going on? It's Billy here from the best place to buy gold online. I hope you're having a fantastic day and get in gold now. Prices could hit $1,900 an ounce. Boockvar said this on in today, just a few hours ago. So this is on the CNBC website, and I'm hoping this website is kind of low for me. Bear with me, it's a bit slow. Gold's losing streak continued on Tuesday as the precious metal tumbled to its lowest level in more than 5 weeks. However, one of Wall Street's most closely followed analysts says the dip presents a prime buying opportunity and that bears are reading the market incorrectly. Again, I don't understand how the Fed still has this credibility. The more it talks, the markets still respond. And again, Boockvar goes on to say this is just the beginning of a new bull market in the metals. The Lindsey Group chief market analyst Peter Boockvar told CNBC Futures on Tuesday. Ultimately, Boockvar believes that the 2011 highs of around $1,900 for gold are not only reachable but surpassable, as reason that bull markets historically exceed the previous bull market at some point. As Boockvar sees it, it's just a matter of when. In order to be bearish on gold, you have to believe that the Fed is going to embark on 100 to 200 basis points of hikes over the next couple of years, which I think is completely unrealistic, added Boockvar. This is an ideal opportunity for those who have gotten in, and citing the relative strength index. Boockvar said that gold is the most oversold it has been since mid-December. He also added that global interest rates have given trillions of dollars worth of sovereign bonds negative yield, and coupled with rising Fed rates. This development would theoretically provide gold investors with positive carry on gold. The precious metal is in the midst of its longest losing streak since November 2015. For additional context, Boockvar highlighted that the mid-2000s, when the Fed raised the federal funds rate from 1% to 5%, during that time, gold went from $400 to $700 an ounce. The analyst also cited that the start of 2016, when Bank of Japan governor adopted negative interest rates, however, the move failed to help the nation achieve stability in its currency. And obviously the market acted in a contradiction to what he expected, said Boockvar of Curado. This was at the beginning of the end of central banks. Influence on markets, that's one thing that was a major factor in the gold bear that began in 2011, and infatuation of faith in central banks, notably the Federal Reserve. Now Boockvar believes that the nation has changed drastically. The growing likelihood of another rate hike should be a glaring technical sign of any tape watcher. Reason Boockvar in his coverage. So I don't believe the dollar breaks out higher on another rate hike and therefore remain bullish on gold and silver and other commodities. So there you have it. It's just to back up previously what I shared with regards to a video that Jim Rickards said, and also just a note on the fact that he believes it will go to $1,900 an ounce. In order for us to reach that point though, we need to get a breakout above $1,300 to that $1,400 mark, and that is a very historic level. Once it hits that $1,400 mark, we will definitely see 2011 highs, and probably, like this guy says here, no bull market has ever not succeeded its previous highs from the last bull market. So there you have it. I hope you got value. If you did, feel free to like, comment, share. And if you want to get yourself some physical gold, you want to start acquiring physical gold in small gram bars, go ahead and check out my website, goldfinancial.de. We have the best prices on the market in the UK and in Europe, and we challenge you to buy it cheaper elsewhere. Start swapping your fiat currencies for real money, and I'll see you on the next video. Take care. Bye bye.